Welcome to Your Lot and Parcel podcast with your host, Benjamin Diaz, designed strictly for you, the consumer. You will find that this platform has your best interests at heart.
In this episode, we are discussing the benefits of the CDFI, which is the Community Development Financial Institution, designed to help first-time home buyers with their down payment and closing costs. The concept or the history of the CDFI can be traced way back to the 1880s, when the first minority-owned banks entered the market to service low-income communities. In the 1930s and 1940s, credit unions were created as nonprofit financial institutions and were owned by their own members. Although they were not solely created to serve distressed communities, therefore not all are classified as a CDFI. However, they did provide loan options for individuals and small businesses and paved the way for the community development organizations such as the Springboard.org CDFI. Therefore, allow me to present to you the president of Springboard.org CDFI and also doing business at Springboard Home Loans, and not to mention, she's also a wonderful lady, Joanne Cordero. Hello there, Joanne. Thank you for joining our show this afternoon. I appreciate you taking time to discuss some of the programs that you promote. And so, Joanne, tell us about the Springboard.org CDFI and your mission, if you would, please.
Yeah, great. Thanks for having me, Ben. So Springboard, our primary, we're a mortgage lender and broker. We provide mortgage services, and our primary mission is very focused on helping bridge the wealth gap in America through homeownership efforts. There are, people across this country that don't know that they could even be homeowners. And so our mission is to help provide guidance and information, education about the mortgage loan process and the opportunities that lie with being homeowners. And, so when customers come to us, we, help identify programs or different products that meet their individual needs wherever they're at in their journey to, one, even understanding that they could be a homeowner, or if they know that they could be, we help them get ready for that homeownership and a mortgage.
Mm-hmm. Very good. Now, as far as financing and who may qualify for these programs, Joanne, can you touch on that?
Well, generally, there's an affordability factor, right? So we want to make sure that you have the financial wherewithal to afford the house that you want to buy. And of course, everybody's heard the word, credit score and FICO score and why those things are important. Oh. And for lenders to take a risk, if you will, to give somebody some money, they want to make sure that they're a good credit risk, right? That they have the money to pay back the loan. And so that looks at your financials, how much can you afford? And then it's also what's your credit rating, which is, your grade, if you will, that the lender will look at to whether they're willing to take the risk that you're a good credit risk for them, that you'll pay the money back, in short.
Exactly. Yeah. So would you say that these are folks with low to moderate incomes that can qualify?
Most of our customers, we cater to what we call, first-time home buyers or those that have low to moderate wealth. And that's, I can give you a quick definition of, how that's considered. So a lot of the programs that we look at what's called, your median income level. Right? So the government looks at, anything around what's your income level given the size of your family for the area that you live in, which is, then they look at what's the median income level for that particular area. And then there's a percentage of that, depending on what kind of program you're in, that, if you're lower to moderate income, you could qualify for special programs if you're at or below the median income level for your area.
There you go. Very good. Your organization covers only California, or do you cover other states?
Our company, we're home based in California, but we're licensed to do business in Arizona, Texas, Florida, and Illinois.
There you go. Very good.
Yeah.
So let's say I'm over there with in Pennsylvania. Would there be a website that I can go to see whether there's a program as such available?
Well, we don't do direct lending, or we
Correct.
don't provide service. We're not licensed in that particular state.
Okay.
But a place, I think, if you're a first-time home buyer or somebody who is maybe getting back into the market, maybe in the last recession you had some issues, and so you were a homeowner and now you're not. Now you want to get back into it. A good place to go is to start with homebuyer education. And you can go to the HUD.gov. All of the HUD-approved housing counseling agencies look for your area. We work with a company, credit.org. They're, we're very close with them, and they provide homebuyer education. You can go to their website, credit.org, and there's a whole host of resources for just financial literacy as well as homebuyer education. So you can start there. If you're looking for just a mortgage, if you will, I mean, you certainly could give us a call. We can help refer you to somebody in that state, or, realtors, family, friends. Most people know somebody who's in the mortgage business that can help them.
Absolutely. Well, good. I appreciate your thoughts on that. And of course, you indicated home buyer education classes that are available through your sister organization, credit.org there. Could you speak to some of the following classes or topics they discuss there with, let's say, for one thing, preparing a home ownership would be one.
I mean, the class, there's a what they call a HUD approved class. So I'll back up just a second if you don't mind.
No, go ahead.
If you're going to qualify for a down payment assistance program, for example, again, we talked about there's income limits, right? We want those funds going to the people that don't have the ability to save as much, or that wherewithal, so they become homeowners. Most of those programs require that the customer, the borrower, go through an education and get a certificate. And there's an 8-hour class that can be taken online. Pre-COVID, this, you could go into a classroom for it. Now you can do it on a virtual, like on a Zoom call. So there's lots of places you can get these classes. And they really start out at the basics of, what do you need to be a successful homeowner? You're a renter, so maybe you might not think about what happens when the toilet breaks, right? What do you do? How much do you need to reserve for just basic repairs in your house, right? Most people own a car, so they know, well, if my car breaks, I'm going to have to, pay to get the oil changed. I'm going to have to, get new tires. But again, when it breaks, I need to take it to a shop. Well, when you're a homeowner, you need to know that those responsibilities will pretty much fall on you. And while you don't need to be a plumber, you need to know how to access a plumber, or, what to look for, how to save to make sure that you have enough money coming up to pay for that maintenance. And the class really starts to prepare you to think about it that way. Managing your money, for example, is like, putting a little bit aside for those repairs, or maybe you want to, spruce up your house and get a new paint job. So just the classes really make you start to think about what the totality is of being a homeowner. It's not just about getting a mortgage and making a payment.
It's just general maintenance and so forth.
Right. And then, the class also digs real deep into the importance of your credit rating and how that affects your ability to get a loan, to get a good interest rate on your loan, and then what your debts are, maybe help you understand that, again, the affordability, how much money you make, how much house can you afford? And then it couples with, well, what are your other debts? Do you have a lot of credit card debt? Do you have, car payments? And where can you really budget your money so that you can be successful in your homeownership journey?
Okay. That sounds like it's very thorough. Then you got, you have, let me see here, shopping for a home as well. I believe it's one of the topics that class touches on.
Right, exactly. So, gosh, there's so many ways people shop for homes these
Oh,
days,
yes.
right? You can
Oh,
look
yeah.
online. I mean, I think
Mhm.
most people start there.
Mhm.
Get a feel for the area that they want to live in. If you have kids, what kind of school district? I mean, there is just so much information online now, like never before, right? We used to, traditionally you just go to a realtor and go, okay, I want to live here, and then you really rely on the realtor to tell you, what the characteristics of the community is. But this class will talk a little bit about things that you should look for in your community, what, again, to type of schools that you may be interested in. And, is it rural? Is it urban? What are you looking for? So most people, we touch on that in the
Mhm.
class. So you get a little feel for where some best places to go
Yes.
are. And then we transition and also talk about, what it takes to actually qualify for a mortgage.
Mm.
It's not just a matter of talking to a loan officer. You absolutely need to get an experienced licensed loan
Yes.
officer to work with you. But the class helps prepare you for the documentation you're going to need. Again, making sure that your ratios of your income to how much debt you have, what your monthly payment could be. And so the class just gives you that really good overview of what those things are going to be. So you're prepared. Hey, I need to have 2 months worth of bank statements.
Mhm.
I need to have 2 years worth of tax returns.
Yeah.
I need to have a steady income for the past 2 years. Let's say that I'm self-employed, but I get paid and I cash my check and I just put my check, my cash, I use everything in cash. Well, the class will help you understand that you need to have evidence, right? Documented evidence
Absolutely.
that you have that money. And so it just helps you really understand and go, oh, I didn't know I was going to have 2 years worth of tax returns. Do I have those handy anywhere?
Yeah. Yes. Exactly. So, yeah, the underwriter. Of course, you have to cater to the underwriter. Available down payment and closing costs programs. You touch on that too, as well. I understand.
Yeah, this is an exciting area that
Yeah,
I guess maybe exciting. I get excited about it because home
it
ownership,
is.
especially for first-time home buyers, there's so many people that think home buying is out of reach because they don't
Mhm.
have 20% down payment, and that has been ingrained in our brain, forever. That, well, if you don't have 20%, you can't buy a home. And there are, I think, probably the past 5 to ish years, there's been so many down payment programs that people
Yes.
aren't aware of.
Yes.
And I'll give you a little resource that
Sure.
there's a website, downpaymentresources.com.
Hmm.
Or you can Google it and just look, and you can look for in your area. It gives you a little filtering process, like search process,
Hmm.
of where you can find down payment assistance loans, and they range anywhere from the local city
Hmm.
might have some funds available to the state. Most states have a program for down payment assistance, or they have
Hmm.
a lending program that allow people to get into their homes for as little as 3%. Some
Yes.
have, they'll fund them, and there's 0%. We You can get programs where there's no payments for the life
Uh-huh.
of the loan as long as live there. They might get waived in 5 years. There's so many different programs depending on
Mm.
what your situation is and where you live.
Very good. And that's anywhere in the country. I think it bears repeating that website again, just for anybody that's listening
Yeah,
in.
it's called downpaymentresource.com.
There you go. No, I think
Yeah.
that's quite a good deal for those that want to make their dream into a reality. That's great. So yeah,
Yeah.
I understand those are structured differently. Sometimes they are deferred or
Right.
amortized. The down payment assistant loans.
Yeah, we've found that they can range from a few $1,000s in assistance all the
Hmm.
way up. There's programs that offer $100,000 worth of
Wow.
assistance.
Yeah.
And with the key for the down payment programs is that you really work with a mortgage loan officer that really understands that program.
Yes.
Most of them have the same qualifying criteria, if you will. Most
Mm.
of them, again, are for folks that have lower to moderate income. So again, you want to look at find in your area. So I'll give you an example. If you're in Riverside County, which is where our home base is,
Hmm.
and you have an income of your total household of $65,000, you want to look and say, well, what's the area median income for Riverside County?
Yeah.
And it just happens to be, I looked it up, $65,800.
Uh-huh.
So this particular family of four, all income in the household, would qualify for programs because they're going to be beneath that level, right? Typically, it's
Oh,
between 80 to 100% or lower of
I
the
see.
area median income that we want to have.
Okay.
And once they get those, then the programs, like you said, yeah, they have a wide range of terms, meaning some there's no payments,
Hmm.
some accrue a small amount of interest over the life of the loan, but there's still no payments. Some have small interest payments. And then some are even forgivable after a period of time.
Mm.
If you've lived in your home for 5 years, some may just be forgivable at that point. So they all range, which is why you really need, somebody who understands these programs to help you get the best one.
Today, we are complimented by the company of Joanne Cordero, the president of springboard.org, CDFI, and she's telling us how the dream of home ownership can be realized. Yeah, these down payment programs, where do they come from? Are these grants or where do
Well,
they
there's
come
a
from?
lot of money from the government that
Uh-huh.
puts forth. HUD has programs that they provide each state. You can apply, if the state can apply for funds.
Yes.
The cities, municipalities may have bond programs
Mm-hmm.
that promote home ownership, and they allocate certain amount of money. The challenge with the down payment programs, again, it's the qualifying criteria because you
Right.
have to meet the income levels.
Correct.
And the second is that sometimes there's not that much available, right? There could be a city that has 5 grants available for the year, right, for $70,000 each, right? Well, once 5 people get those, then there's no more until the next round of
Oh, I
funding.
see. I see.
Yeah. So, typically towards the end of the year, you'll see that there's not as much available, right? So you might have to wait around. But if you're working with a good loan officer who understands these programs and works a lot with first-time home buyers, you can be prepared for those.
Mhm. Sounds good. Sounds good. I know your organization. It's a nonprofit, the Springboard
Yeah.
CDIF. What is it? CDFI, I
It's
should say. What is?
CDFI. It's a Community Development Financial Institution, and it's
Mhm.
a designation that we've had for over 30 years. That it's a Treasury, U.S. Treasury designation for the ability to lend money and borrow money, if you will, and then lend money
There you go.
at a little cheaper price. A lot of small businesses are
Mhm.
CDFIs, small
Mhm.
business lending, and a lot of credit unions are CDFIs.
Okay.
We've had one for a long time. We're not, we don't actively use it right now, but it's still our lending platform and our primary designation through the Treasury.
Very good. Then you have DBA, a Springboard Home Loans.
Right.
How does that work?
Well, Springboard Home Loans is our brand for our customers, our
Okay.
consumer-facing business. CDFI is our legal entity name, if you will,
I
but
see.
Springboard Home Loans is how, we represent ourselves to the public.
Very good. DBA, doing business as. Okay.
Yes, exactly, yeah.
All right.
So you can find us at springboard.org. It's the easiest way to find us.
I think our listenership may be interested in some of the programs, such as and their characteristics. For one thing, conventional loans, because it's not every day you buy or purchase a home and you're trying to acquire a loan. And by the way, the definition of a first-time buyer is what? At least 3
Yeah, you have
years.
to not be a homeowner in the past 3 years.
Exactly. Good. So some
Yeah.
had construed that to mean, well, I've never owned a home, right? So that's not quite true. At least the
Well,
last
some
3.
people think, well, I have owned a home. Do I still qualify? Well, if you
Exactly.
haven't owned a home in the past 3 years, generally speaking, you would qualify as a first-time home buyer.
Very good. Exactly. All right. Very good. So can you touch on the characteristics of a conventional loan?
Sure.
Joanne?
So, there's three primary types of loans out there for, the general public, I would say, right? The majority of people fit into an
Sure.
FHA loan, which is a Federal Housing Administration loan. And, those are, again, tailored more for first-time home buyers or those folks
Mhm.
that have small amounts of down payment. You can get an FHA loan with as little as 3% down. And FHA also is much more lenient on folks that may have been struggling or just starting to develop their FICO, their credit history, right?
Yeah,
So
sure.
an FHA loan may start at maybe a 580 FICO. That's
Mhm.
pretty low, but we know as a first-time home buyer, you probably haven't established a lot of credit. So an FHA loan is really well for those folks that don't have a lot of established credit, had credit problems in the past, and or don't have a lot of down payment, and maybe they can't also access down payment assistance programs, but they still want to be homeowners. There's VA loans, and of course, those are really reserved for the veterans.
Yeah.
There's those programs. Most of them require no down payment, but they're very specific. You have to be a veteran with a certificate to get the VA loans.
Mhm.
And then, there's this population of conventional loans that is most of the rest of the marketplace. And those are typically people, you hear the word Fannie Mae or Freddie Mac, and those are loans that those entities purchase from lenders
Mhm.
as long as they meet certain criteria and loan limits. I believe the recent loan limit for a Freddie Mac Fannie Mae loan is $510,000 across the
Mhm.
country.
Yes. Yes.
And so the
Exactly.
conventional loan, typically, you would have mortgage insurance if you don't have more than
Mhm.
20% down on a
Mhm.
conventional loan. You can get a conventional loan with down payment assistance program behind it as well. And so, it really depends on what your situation is, what the interest rates are for those particular loans, how much affordability you have in your payment, as to which program makes the most sense for you.
Exactly. These conventional loans, of course, you indicated 510. Of course, beyond that, of course, you can get a loan, but then you get into jumbo loans.
Right. You
Those
get into
things.
jumbo loans, which
Yeah.
have different risk levels. They have
Oh, yeah.
different interest rates.
Exactly.
And then there's all the, if you wanted the jumbo loans, or maybe you're somebody who's self-employed and you can't verify income, there's all hosts of other types of loans that we just call non-conventional, non-traditional lending.
Good. Yeah. A lot of the times, the self-employed would take advantage of those.
Right.
Though sometimes they're just based on bank statements and that sort of thing. But
Exactly.
there's a variety. I mean, there's a hodgepodge of different loans. But these conventional loans here, what I appreciate about it is the PMI, the mortgage insurance. That can, once you get your equity built up, you see, you can ask for that to be dismissed, mortgage
Right.
insurance. So that's a pretty good deal. FHA, no, you got to live with that unless you come up with 10%. At the
Yeah.
inception of the purchase, and it'll last for 11 years, and it'll fall off the
Yeah,
mortgage
I
insurance.
literally was just sharing, my nephew is
Yeah.
going to be a first time home buyer, new family, had a, baby and moving to Texas actually, and is
Mm-hmm.
looking at being a homeowner and thinking about, well, how much money am I going to have to save to, buy a house? And I said, well, you can get in at less, than 80% or 20% down. It's like,
Sure.
well, then I have all this mortgage insurance. And I said, yeah, you do, but you have to think about it potentially as a short-term issue, right? Because,
Mm-hmm.
being a homeowner means you're also, you can acquire wealth over time, but with the appreciation of the home. And, of course, that's all market driven and we can't guarantee anything. I said, but, you're in your house 4 or 5 years, then you reassess the value of your house. And if your, loan to value ratio, as you said, goes down, well, then you get all that, you can get the PMI waived. And, that's a good thing. So you got to look at mortgage insurance sometimes as a short-term potential issue versus a long-term, of waiting around to get to be a homeowner, right? So if you're going to wait
Yeah.
to save $60,000, $70,000, that may not happen over a very long period of time. But you still want to be a homeowner. So maybe just sort of bite the bullet and say, all right, I'm going to, pay the extra couple $100 a month to get the mortgage insurance.
Absolutely. Yeah, there's different variables you got to look at.
Right.
income tax benefits, for purchasing a home and so forth.
Exactly. Well, tax benefits. Yeah, exactly.
Oh,
And
yeah.
right now, as you know, right, rates
Yeah.
are at historically low levels.
Yes.
And, if anybody's thinking they want to be a homeowner, just even on the peripheral edge of thought, they really should invest in their education, get involved, get some homeownership education, talk to a loan officer. On springboard.org, I'll give a little selfish plug. We have a mortgage readiness tool on our website that you don't have to put any personal information, just takes you through a series of questions that tells you where you're at in your mortgage readiness journey. And it just factors things like, what do you think your credit score is? How much debt do you think you have? What's your income level? Again, no personal information is required. And at the end, it'll say, or did you have a bankruptcy or foreclosure the last, 4 or 5 years? And it'll say, you might be ready in the first 1 to 3 months, or maybe you're 12 months away, and it'll give you a few action steps to take on what you could do to improve your situation. Just gives you a little bit of a roadmap.
Absolutely. And even then, it's good to discuss that if there was a foreclosure, because again, there's extenuating circumstances, involved, it might have been a medical issue,
right?
That sort of thing, So how about here we got USDA loans. Can you touch on that a little bit?
Gosh, I'm not as familiar with those. You caught me there.
No? Okay, that's okay.
USDA loans are just another form of government loans. They're mostly for rural markets.
Yes, they are.
So I'm sorry, I'm not as familiar with those.
That's all right. You're mainly in the city. This is county or unincorporated areas, and what it is, again, it's income limits are required and so forth, and I think it's a pretty zero down payment, incidentally. And
yeah. But mostly those are for rural communities.
It is, and of course, you look it up, USDA, and to see whether that property. Just punch in the address of that property you're interested in, and it'll tell you whether it's eligible or not for this type of loan.
Well, there you go.
Yeah.
I just learned something. Thank you.
Okay. Home ready. I don't know if you deal into that or not. Home ready loans at all.
Those again are for they're special programs. Fannie and Fannie Mae and Freddie Mac.
Yes.
They buy loans from lenders that originate the loans or banks, and they come up with all kinds of different programs that are home ready. I think or home possible. These are other programs for first time home buyers or general market where you don't have big down payment money. That just allow people to get into loans that they wouldn't otherwise, the old traditional loans that they've had. So it's just another program that, your loan officer can explore with you in terms of whether that makes sense for you.
Yeah. I enjoy the interesting point here about these home readies. If you have somebody that lives with your relative, the borrower can use that income as a compensating factor, not to augment the income, but to, how would you say, go beyond 45% DTI, so up to 50% debt to income ratio. So that helps out pretty good, actually.
I think these programs are just recognizing, right, that the world, the traditional family is not traditional anymore, right?
Nope.
And we need to accommodate for our parents living with us, our kids still living with us, family and friends, relatives, or, other people, and that we need to figure out a way to accommodate how people make their money.
Mm-hmm. Absolutely. Very good, Joanne. Could you relate to us an anecdotal experience and how maybe a family is benefited by these programs?
Yeah, you had asked me that, and I was super excited. I mean, we've had a lot of great stories, but one that comes to mind is a family that we have an office in South San Diego, and our office is located in a apartment building. And so we do homebuyer education out of this office, and we had flyers up. And so this family had been living, in this apartment complex, and the mom was still going to school. And so they came to just an education session, seminar, and talked with the loan officer and realized like they could potentially be homeowners. They never thought that they would be able to be a homeowner because of the down payment. And they worked with the loan officer to figure out what they needed. The wife, like I said, she was going to school, almost finished up with school. And they put like a 12-month action plan together. They had a mortgage readiness plan together just because they decided, you know what, we have a free Saturday. Let's go listen in on this class. And 12 months later, they bought their first home. They got down payment assistance program money. She had finished school and was working. He had had a steady job, but he knew he had to maintain his job. So they prepared themselves, and now they're family. They live in this great house. And like I said, they leveraged down payment assistance programs, but they literally went into this class sort of just on a whim. Hey, let's go check it out. And never thought 12 months later they would be homeowners.
How about that? And that's usually the case. People just don't familiar, and just so it's a matter of getting informed, and what you provide there, those programs. That'd be it. That'd be a good way to go to find out where you stand to buy a home. Joanne, I have really appreciated your time. Can you give us your website and your phone number so folks can reach out to you?
Sure. Hold on. I'm going to make sure I get you the right phone number. We have so many of them, but it's springboard.org. So it's spring.org. And our phone number is 888-983-2344. If you wanted some more information, you could email us at info @springboard.org.
Very good. Appreciate that. And I think it's a wonderful thing you're doing there to help folks, and I really appreciate, again, the time you spent with us.
Good.
And I wish you well, Joanne.
Yeah, thank you for having me. I appreciate it.
Oh, it was my pleasure. And you enjoy the rest of your day.
Okay, thanks.
Hey, listeners, if you have a specific topic you want to discuss that is germane to the real estate industry, drop me a note at yourlotandparcel.com. And now, if you will excuse me.
This program has been produced by Isaac Diaz with music by Echo Foxtown. All the opinions expressed in this podcast are opinions only and should not be relied on. For more information, please visit the website yourlotandparcel.com.